Today's webcast is brought to you by Oklahoma REO Closing and Title Services. FDIC-insured banks post a record aggregate quarterly income in Q2, and Fannie Mae's first ever community impact pool of non-performing loans goes to New Jersey's nonprofit. Ahead on Thursday's News Wrap. U.S. banking institutions that are insured by the Federal Deposit Insurance Corporation earned an aggregate net income of $43 billion in the second quarter of 2015, up to $2.9 billion from a year ago, according to the FDIC's quarterly banking profile released Wednesday. The $43 billion aggregate net income for Q2 was the highest quarterly income for the record for FDIC-insured banks and was largely driven by the increase in net operating revenue of $3.6 billion. Community bank earnings increased by 12% from a year earlier to $5.3 billion, and an operating revenue rose by 8% from a year ago to $22.3 billion at community banks. More than half of the FDIC's 6,348 insured institutions reported year-over-year growth in quarterly earnings, while the portion of banks that experienced nonprofit fell from 6.8% last year to 5.6%, the lowest since the first quarter of 2005. The FDIC reported that loan growth within banks remained steady in the second quarter, with total loan and lease balances rising $185 billion. Fannie Mae announced Wednesday that the nonprofit New Jersey Community Capital is a winning bidder for the GSE's first ever community impact pool of deeply delinquent non-performing loans. The community impact pool of NPLs was specifically structured to attract bidding by nonprofits, small investors, and minority and women-owned businesses. The pool consists of approximately 75 loans with an unpaid principal balance of about $11 million. You can check out these stories and all the latest happenings in the industry right here on our site. Thanks for joining us. We'll see you again on Friday. Until then, stay with DSNews.com for the most relevant default servicing news.